Okay, let's go ahead and click into 19.3 Work Together, where we will be completing some plant asset records as well as journalizing our adjusting entry for annual depreciation. So we have a few tabs up here in our information spot I just want you to see. So we have the depreciation calculations that we would have done in 19.2 with our depreciation expense for a display case, as well as the workstation, and then any additional information that we might need in order to fill out our plant asset record. So I'm going to click into this little guy so we can fill out the rest of our plant asset record. So the first one says use this information to complete each plant asset record for the years 21 through 2030. So we have here the display case. So this information that we need for this top part, remember section 1 is the information from when we bought our plant asset. So the display case is here. The plant asset record number is 105. And then we go to our general ledger account information, which says it's 1220. This falls under store equipment. We purchased it on January 4th. And the original cost, again, we might have to go back to this guy. Our original cost was $40.40. And our estimated useful life was 8. Salvage value 200. And our depreciation method is straight line. So essentially all we're doing is copying in our information from the records that we've already completed. Remember, we're not going to have anything to do with section 2 because we have not disposed of our plant asset yet. And then we scroll down here to this information, and we're just going to again be pulling this from the record up here. So our annual depreciation expense stays the same. It's $480 each month. Accumulated depreciation was $480, and our ending book value was $35.60. And then 48 again. Accumulated goes up to $960, and our ending book value is $30.80. And then we look at our last one. Oops. $480 for annual depreciation expense. Accumulated goes up to $1440. And our ending book value is $2,600. So again, all we're doing is pulling this information from the depreciation expense chart that we already have filled in. So let's go down to our next one now, which is our workstation. So again, we need to go up to our additional information and plug in the information for our workstation. Our plant asset number here is 106, found here. General ledger account information is 1210, and it is office equipment. Oops. We purchased it on September 20th. The original cost, we'll have to flip back to our tab for our workstation. Original cost was $4,800. We estimate we'll be able to use it for 5 years. There is no salvage value on this one, and our depreciation method again is the straight line. And then we scroll down a little bit so we can see our years for 2011 through 2013. We had annual depreciation expense in the first year of $240. Remember, this is because we purchased it in September, so we expensed it over a total of 3 months instead of the full year. So accumulated depreciation the first year was $240, and our ending book value is $4,560. Then we come down and we do $960 because that's a full year of depreciation in 2012. And our accumulated goes up to $1,200. Ending book value goes down to $36. And then our last year again was a full year of $960. Accumulated depreciation is $2,160, and our ending book value is $2,640. So again, all we're doing is simply taking the information we've already calculated and putting it into our plan asset record. Now, what we need to do is figure out our total depreciation expense for the office equipment, and we're going to record that as an adjusting entry on page 23 of our general journal. So they have been kind enough for us. I'm going to get rid of this because we don't need this anymore. They've actually been kind enough to do the calculation for us, so we don't actually have to find out our adjusting information. So all we need to come down here into our general journal and do is journalize it. So we're going to put December 31st because that's the day that we're doing adjusting entries. And remember, the account that gets the debit in this situation is depreciation expense hyphen office equipment. We do not need a document number, remember, because adjusting entries, that serves as our document number. And then the debit amount is simply the $13,125. Our credit goes to accumulated depreciation hyphen office equipment, and that will get the credit of $13,125. So it's really helpful when they have already given us that information, and then all you need to do is journalize it in your general journal. So that is what you have to do for the 19.3 is pretty much a lot of copying down to complete your plant asset record and then recording in your general journal your adjusting entry for depreciation expense. So go ahead and do your 19.3 on your own and then your application problems as well.